Hello everyone. Today I tried to make a video on something very interesting, which might be of interest to the youth of today. A lot of us are very ambitious in life and they want to make it big from the very beginning. Once they are, academically well versed and they want to settle in life. Even I am of the same nature, and I thought probably it would be helpful for people who are still finding a way out about the topic that I'm going to discuss. So I thought I'll probably record a video on the same. So this video is regarding if you want to purchase a home when you are young and obviously you do not have the funds, but you obviously want to start it from the very beginning. What is a smart way to take a home loan given all the hype about, principal interest and all of that we have to pay so much of interest and it will take so many years to, actually pay the home loan. So who will take so much of liability, so much of, anxiety among the people without being financially well versed as to how you are supposed to go smartly with things and how your approach can be a more better one compared to just being frightened as to how to go about things. So I have actually tried to create a full Excel model, not exactly a model, it's a very simple calculation that probably I will try to go through this video as to how smartly you can go for a home loan and you can buy a house if you wish to do so. And probably you will get further insights when you see the same. So I'll quickly share my screen. Okay, so this is an Excel model or a calculation that I've prepared, and I'll try to explain how to go about things. I'll walk you through. So let's say, for example, as I've taken the loan amount to be, let's say, for example, you're purchasing a property of 50 lakh. Let me also point out the fact that for beginners who are, do not have idea about it, that banks do give you the loan of 80% of the value of the house that you're going to purchase. The 20% you have to make a down payment, or you should have funds for that. So before you plan anything, you should keep that in mind. I've taken the rate of interest to be 8%. In current scenario, it's less than 8%, but on a conservative basis, I've taken 8%, and I've taken the tenure to be 25 years. I'm just taking an example and trying to show you how to go smartly about it. So according to all the calculations, you can calculate the EMI to be 38,590 rupees. I have used the PMT function. If any of you has confusion regarding the same, how to use the same, probably you can, message me or I'll let you know the process. So this is about the calculating the EMI process. So I have created, this is known as an amortization table where you have 5 columns. You have the month for which you're calculating. So since if we are calculating for 25 years, we will have 25 into 12, we have 300 periods, 300 months for which my calculation would be based. I have the EMI column, which is technically going to be the same unless and until there is a change in the repo rate of the Reserve Bank of India and the rate of interest changes. So that is why I've taken a more conservative rate of 8%. Towards loan, what I mean to say by that is how much amount that you're paying towards the loan and how much amount you're paying towards interest and the outstanding loan every month whenever you pay the EMI. So people generally, it's very amusing and very sad also to know that people are not aware. People think that if they're paying an EMI of 38,590, 19,000 is towards EMI and 19,000 is towards the principal and 19,000 is towards interest. So they feel that if every month they are paying half of their principal amount. Well, that is not true. How the banking mechanism and how the financial ecosystem of the nation or of the world functions, always in the beginning, the amount paid towards the loan is very less. I'll walk you through the first row calculation that I've done for better understanding. You have an EMI of 38,590. So the next column that you're going to calculate is the interest on 50 lakhs into 8 by 12. So 8% is the per annum rate of interest. So obviously you'll have to divide it by 12 and then multiply it with the principal amount that is outstanding as in before the first month. So you'll get this much amount of interest. And obviously if 33,333 is towards interest and you're paying an EMI of 38,000, so 5,000 is towards the principal amount. So it is not the half ratio that we think. And accordingly, the amount of loan that would be outstanding would not be 50 lakh minus 38,000. So people would have the notion that I have a loan of 50 lakhs. I have paid 38,000 to 40, whatever, 49 lakh amount of loan I have pending. I mean, outstanding. So let's say, for example, this thing is not this. So I clear the same. So the outstanding loan amount is 49 lakh 94,742, which is nothing but the 50 lakh subtracted with 5,256. That is the amount paid towards the loan. So if you see, technically after 1 month, you have not paid much amount of the loan. As and when you go through the months, you will find that your principal payment, the amount that you pay towards the principal increases and the amount that you pay towards the interest decreases, because automatically your outstanding loan amount is also decreasing throughout the year. So you can find that, 36 at the end of the 293rd month, you have 36,000 paid and towards principal and this much amount paid towards interest. So this automatically reverses at the end of whenever you reach the maturity of the loan period. So this is something which I wanted to clear. Now, what is the smart move that I was talking about? Now, let's say, for example, if you go for this much loan, 50 lakh loan for a tenure of 25 years with a rate of interest of 8%, you will pay the full amount of loan at the end of 25 years, but you will end up paying up so much interest, 65 lakh 77,244, and the principal amount is roughly 50 lakhs that you will pay at the end of the 25th year. So a lot of people are fighting that so much interest, we should never go for a home loan. So the smart way to go, so this video is only for people who are starting very fresh and they want to just, not wait till they are turning 40 or 50. Obviously, there are limitations where people can, not enter. They have other responsibilities, they have dependents, and that is why they cannot enter at that stage, at a very young age, to go for a home loan. So that is a different case. But if you can, you don't have people dependent upon you, and you want to start from the very scratch and from the very beginning, so this is the process that you can opt for. So you will be ending up paying 65 lakh amount of interest and 50 lakhs. So total amount of payment you can find, if we see the sum function over here at the bottom of the page, we'll find that we have paid 1 crore 15 lakh 77,243. I took a loan of 50 lakh, but I'm ending up paying more than, I'm almost paying more than double. So this is why people do not go for housing loan. And given the fact that tax deductions, the interest amount that you pay, the principal amount that you pay, you have tax deductions, but that is actually, if you do the cost benefit analysis, that won't be a very appropriate thing to say that the tax deductions will, overweigh the burden of the interest. But what I'm trying to discuss here is how to go smartly regarding this housing loan process. So let's say, for example, the only way that you can, there are two ways. The first way is that you keep prepaying the principal amount at certain period of time. Let's say, for example, you have a specific salary on the basis of which you have decided that you will be able to pay 38,000 EMI, right? You have a salary of 80,000, right? You have decided that 38,000 you can pay for EMI. There's 40,000 miscellaneous expenses, rent, leisure expense, and whatever other commitments you have. So we have the EMI is almost going to be the same. There's not going to, the EMI will not go to 50,000 from 38,000. The thing is that now you have not factored for the growth in your salary or the promotion or other incentives that you will be getting in the middle of these 25 years. So obviously that has to be factored, and you will be earning, let's say, for example, your salary at the end of 30 years would definitely be more than 80,000 if you're earning at this point of time. So let's say, example, it's 1,50,000. It's 1 lakh. It has to be so much if we consider the inflation and the normal growth in salary as per the current work environment. I'm talking about stable job profiles. Obviously, you can go for the home loan if you have a stable source of income and not just freelancing work and all that. That is a separate issue that I'm not trying to discuss. So what you need to do is that you need to prepay some amount that, for example, your salary has increased to 1 lakh after 2 years. So for 2 years, you went on paying the EMI. From the third year onwards, what you need to do is the 20,000 extra that you're getting per month. So 2,40,000 extra that you accumulate at the end of the year, you keep on investing the amount somewhere every month, be a SIP, be it everything. So 2,40,000 would actually grow to a higher amount, let's say 260, 265, whatever, and you prepay the principal amount. So your amount of loan outstanding would decrease at a much higher extent than it would have normally been if you would have normally gone with the normal EMI process that you are going. So accordingly, your interest element will, every year you do this. From 1 lakh, if it is 1,10,000 the next year or the year after, again, the amount accumulated you invested throughout the year, it grows, and then you again prepay. So this will reduce the amount of interest that you're going to pay throughout the 25 years period, and it will also help you to pay the loan amount in a very shorter span of time, let's say around 10 or 15 years. Okay. The other way of doing this is considering an inflation of 5% per annum. I'm considering a low amount only, 5% per annum inflation. You increase, there's a system where you can go to the bank and tell them that I want to increase my EMI, and the amount that I'm increasing over and above the current EMI, that has to go towards the principal payment. Or if not, normally only you can increase the EMI. It will help you in if not towards the loan amount itself, you can normally set off as it was happening. As I showed, I walked through the first floor, the first month, you can do it as in that approach, because a lot of banks do not get into all of that. So I'll show you the advantage of that. Let's say for example, every year I increase my EMI amount by 5% as per the inflation. So if I put in 5%, I've already applied all the formulas. So you will see that till 12 months you are paying 38,590. From the 13 months onwards, you are paying 40,520. Now again, if you go towards the 25th month, you will be paying 42,546. It's nothing but a 5% increase over 40,520. So applying this, you will be able to, let's see where we are getting the loan amount outstanding as negative. So we will be able to say that at this period end, we will be able to repay the loan. Sorry. So what we can see over here is the amount is turning negative from the period 164. That is roughly around 13 or 14 years. 13 years is 156. So 13 year, 8 months. You had gone for a loan period of, let's say, for example, 25 years. And just by increasing 5% EMI amount, you are being able to prepay the loan almost in the almost half the tenure. Not half exactly. Half would be 12.5 years. Little more than half. You do the cost benefit analysis. I mean, we all are in a position, if we have planned to decide to buy a house, all of us in this current market are expected to get 5%, be able to be in a situation where we can increase our EMI by 5% at the end of the year that we are standing. So if you follow this practice, you can repay the loan that you have taken for 25 months in 13 years. This is the power of compounding, and this is the reason why you should be very financially well fluent with all the concepts, and you should obviously keep a track of everything. That you should be a financial doctor, basically, of your own expenses, of your own incomes, and of your own investments. So this is something which I wanted to talk about in this video, because a lot of people tell me that the interest amount, the 25, we have to pay the same amount every month for 300 periods, the same amount, that it hurts us. But they're not looking that they are owning real estate. I mean, it's one of the most powerful investments, and it can take you from where to where. You have no idea about how powerful an investment real estate is. Obviously, there will be capital appreciation. And so obviously, if you have the funds, it doesn't make sense to go for a loan. You just pay the amount and buy the home for yourself. A lot of people, there are filthy rich people in our country and the world whatsoever, they do so. But for people who are living in a rented premises, they have aspirations to go for a property of their own, a house of their own. I personally am very fond of, I've been very ambitious about it. So this is how you can start, and not just the amount of 25 years get into your head that we have to keep paying on the 25 years the EMI amount for 25 years. If for example, even if you would have gotten an inflation in the salary and this wouldn't strike you, you would end up paying up the same amount of EMI for 25 years, paying so much amount of interest. So my intention of this video, recording this video, was just to make you well aware and make you save on the amount that you would otherwise end up spending, and be in a better process to manage everything. So I hope this video was helpful, and thank you very much for sticking to the end. Thank you so much.